Good morning, friends. Hope you all are good, feeling secure, energetic, and doing good whatever you are doing and wherever you are doing. Friends, today I have taken up a very important and globally known concept. This is this concept is basically relevant for all kind of viewers, all kind of target audience, whether the target audience is from the student fraternity or from the business fraternity or from the professional fraternity. The concept is what is financial market and what are the different types of financial market, or in the simple sense we can say how financial market is basically categorized and how the financial market can be defined in different segment. So financial market is the market where the financial instruments are traded. Financial instruments are traded, I mean to say, where the instrument like stocks, instrument like bonds, currencies are traded and executed either through over the counter or exchange based transactions. So financial markets are basically broadly categorized by what type of assets that we are traded, like stocks, bonds, currencies, commodities, derivatives, and crypto, which is the latest one. And if we categorized in terms of their function and structure, so it could be money market versus capital market, primary market versus secondary market, OTC means over the counter or exchange traded. So financial market facilitating the flow of capital for investment, risk management, economic growth. So whenever you want to analyze or understand the economic parameters and economic growth of any country, the financial market is the one which describes truly whether the economy is growing, whether the economy is developed, whether the economy is performing good or not. So key type of financial market includes basically stock market for ownership and bond market for debt and forex for currency exchange and commodity for raw material and derivative for risk transfer. So derivative market is kind of a financial market. It can be used for the purpose of hedging, for the purpose of risk management. So let us understand how financial market is categorized in terms of assets trading. First is stock market, and stock market is also known as equity market, where ownership shares stocks in public companies allow the investor to profit from company performance. So here the investor get the profitability or whatever the risk he is taking based on the performance of any public listed company. Second is bond market. It is also called debt market in India, where debentures or bonds are listed and investor use these market for to get the desired return. So investor buy debt securities like bonds, debentures from the government or a corporation and receiving regular interest payment and principal repayment. Third market in terms of asset trading is commodity market. Commodity market is basically deals in physical goods like gold, like oil, corn, meat, and so on and so forth. And next is forex market. Forex market is also known as currency market. It facilitates the exchange of different national currencies through banks. And next is derivative market. Derivative market wherein trades contracts like futures, options, swaps, whose value is derived from the underlying assets and it is used for hedging risk. And latest one is cryptocurrency market, trades digital assets like Bitcoin and Ethereum. When we basically categorize the another way, the financial market is based on market structure or a function. It is money market, then capital market, then we have primary market, secondary market, and over the counter market. Money market is basically short term highly liquid debts, treasury bills of government for immediate financing needs. Capital markets basically deals with the long term securities including stocks, bonds for long term investment. primary market where new securities are first issued and then sold, that is called IPO, also IPO, FPO. Then we have secondary market where existing currencies, existing securities are trading between the investor, and secondary market like BSE, NSE, NYSE, Nasdaq, etc. Over the counter market means decentralized trading where directly between the two parties rather than formal exchange. There is no stock exchange exist in over the counter market. There are two parties who are directly dealing with each other. There is no exchange or intermediary for dealing in transactions. So transactions are done through between two parties directly, like between banks and customer and bank, and so on and so forth. Then there are other type of financial market. One is insurance market, and another is interbank market. Insurance market for risk pooling and transfer, as we all know about insurance very well. And then interbank market, this market basically wherein bank lend and borrow money with each other for their short term money requirement. So friends, this is all about the money, all about the financial market and the types of financial market. So hope you have got some relevant information and put from through this video, and I'm hoping that whatever knowledge, whatever the information that I am providing you is relevant for your purpose, and you may use this information for your uh, whatever the work you are doing, wherein it can be used. In my coming video, I will provide more insight about the market, how markets are basically do the transaction, how intermediary execute the transactions. There are a lot of things need to be discussed. So I will be providing and sharing with you the information, relevant information about the finance and financial concepts and its models, including markets, including intermediary, regulatory compliances, and how we can grow our knowledge and raise our knowledge much more better to get the more insight about the market and to become more knowledgeable finance person. So my dear friends, till then, stay blessed. We'll meet soon, and if possible, if you think my videos are relevant for your purpose, please share my videos to your references, your known, and subscribe my channel. Thank you very much.